Market erases gains as index heavyweight slips from opening highs. Nifty slips more than 200 points from day's high to close flat. Volatility index ends higher by over 3%. IT and private banks are the top gainers in the session today.
Promoters of Infosys opt out of the IT major's 18,000 crore rupee buyback in a signal of confidence, even as the Trump-Modi call and clarification on US H-1B visa norms boost sentiment for India's technology sector.
HUL's new MD, Priya Nair, says the FMCG major will be obsessed with volume-led growth and will invest more in high-growth segments and e-com as well as Q-com. Her comments follow HUL reporting an inline set of numbers for Q2.
Hello and welcome to Markets Forward, the show where we aim to get you all the key data points from the day's trading session and, of course, look at gearing you up for the one that's coming up tomorrow. I'm Surabhi Upadhyay. With me is Vivek Iyer. And Vivek, today was not to be. It was a day that started with great expectations of the all-time high, but not quite. Look at the final close, just about 22 points on the Nifty.
That's right. Good afternoon, Surabhi. We started this day hoping with the indications that the GIFT Nifty had given us that we could float to the all-time high levels, but during the session and especially in the last half hour of the session, we saw significant selling pressure come across. And in fact, the small cap and mid cap index actually ended the day in negative territory. But our viewers, we've got you covered for the next 20 minutes with all the big news and key corporate developments on Dalal Street, top corporate voices and key events to track for tomorrow's trading session. So let's kick off the day's market action. Sudarshan is standing by the wall with all the movers and shakers of the session today. Over to you, Sud.
So despite a big fall for the market from day's high in the last hour of trade, some of the stocks or one sector that has been in the focus since morning, that was the IT pack, and the top Nifty gainer Infosys closed with a gain of more than 3% after promoter has opted out of the share buyback that company had announced earlier. Also, there has been some positive talks related to trade between India and US. So that helped all the major IT names like HCL Technologies, Tech Mahindra, Infosys, TCS. You can see all the stocks closing with a gain in the range of 1 to 3%. Apart from that, all the exports-related stocks like textile names of Gokaldas Exports, Welspun Living, even in auto ancillaries, Sona BLW, Samvardhana Motherson, all these stocks have seen a huge gain on the basis of the positive trade talks that we have been hearing over the last few days. Bharat Forge was one stock amongst mid-caps which closed with a gain of almost more than 4%, and that was on the back of big order win that company has got from Indian Army. So total order win here for the carbine is around 2,800 crore, of which 60% of that is going to Bharat Forge, and remaining 40% will be going to a JV between Adani Defense and a company from Israel. Now, ahead of AGR hearing that is scheduled for Monday, Vodafone Idea was in the focus. At one point, the stock was up as much as 7%, but at the close, it was up more than 5%. Now, some of the stocks have closed with cuts, and top of that was all these OMC's names, OMC's, IOC, HPCL, and BPCL. So, two news for these companies. First, crude has been moving higher. Currently, it's up more than 5%. Brent is approaching somewhere around $66 per barrel. And also, there are reports related to Russian import curbs that also might have a negative impact on these companies. That's the reason you are seeing a big downtick coming for all the three names, closing with a cut in the range of 2 to 3%. Now, Dixon Technologies, since the company has announced its Q2 results, it has been moving lower. And also, there is another reason that few brokerages have downgraded the stock. And today also, it closed with a cut of almost 3%. Over the last 3 days, we have seen a big downtick come in gold prices, and that is playing on all the gold financial names. Muthoot Finance at one point was down almost 5%. At the close also, it was down almost 3%. And similar move was seen for other gold financiers like Manappuram Finance and IIFL Finance as well.
Okay, all right. So thanks very much. Indeed, quite a day, but not a day for the index to actually touch those record levels. Thank you for that. Well, let's quickly move to our guests and get some perspective on the market action. We've got Mayuresh Joshi of William O'Neill and Somil Mehta of Mirae Asset Sharekhan. Gentlemen, thanks so much for joining in. First of all, season's greetings to you. Hope you both had a fantastic Diwali. Let's talk index levels, Somil. So I guess the bulls are still waiting. All-time high levels. What did you make of today's trading action and the profit-taking that set in the second half?
Good afternoon to everyone, and happy Diwali to everyone. Today's move has been a little concerning, but I think this is very healthy for the markets. 25,800, 25,700 is a very crucial zone here. 40 hourly exponential moving average is around 25,700. So I'm expecting markets to take support around 25,700 and again resume the uptrend. We are still in the uptrend. We've had an extremely good rally in the last couple of weeks, and I think we are just retracing it a little bit. A pause. This is just a pause, I think, and the crucial support would be 25,700. So buy on decline should be the strategy.
Okay, thank you so much for that, Somil. But do stay on with us. We have quite a few questions for you even later on in the show. Well, moving on, HUL earlier today announced its second quarter results, largely in line with the street expectations. Let's go across to Mangalam, who joins in with the fine print.
With HUL, second quarter numbers lacked fireworks, but they were pretty much in line with street's expectations because of the company had prepped them up post the GST-related, disruption that would happen, GST transition-related disruption, so to say. Revenue absolutely flat year-on-year on a standalone basis. Consolidated business grew obviously on account of the acquisitions that the company had made. But, as per street expectations, the revenues were in line. EBITDA absolutely in line as well. There was a jump of nearly 4% on the net profit, but that was largely on account of an exceptional one-off tax reversal that happened between India and UK. But importantly, the commentary is something that the street would be eyeing from here on. And in her first press conference as the MD and CEO of HUL, Priya Nair did spell it out that she is obsessed with volume growth. In fact, going forward, they are expecting recovery to begin from November itself as trade-related disruptions end by the end of October. And more importantly, the management also guided for margins to be between 23 to 24% as against earlier 22 to 23%. And that's largely on account of the demerger of their margin dilutive ice cream business. Also, given the current state of commodities, they believe that if they stay stable at current levels, there would be an element of low single-digit pricing growth as well. All in all, the second half would be better than the first half, was the sense that the company gave to investors and analysts as the numbers were reported. Lack of fireworks in the second quarter, all the onus shifts to the second half of this year, and more importantly, over the longer term as Priya Nair's leadership plays out.
Yes, indeed. This is just the start. Let's see if it indeed gets better, as the company has been pointing out. Mayuresh, what do you think? HUL, while people talk about playing consumption and, playing the whole the GST-led consumer boost, I don't hear too many positive voices on consumer staples in the market. What would you say? Does a company or a stock like Lever make the cut for you?
Afternoon, Survi. First of all, season's greetings to you, the entire team at CNBC, and all your viewers. I think hope this Diwali is a very successful, healthy, peaceful, and prosperous one. Coming to HUL, I think as Mangalam pointed out, numbers more on line with expectations. I think second half is what everybody is banking upon as far as volume-led growth is concerned. And therefore, I think the expectations in terms of GST cuts, a large part of the basket pool or the product suites for a lot of FMCG companies have either come in the 5% or the 0% category. And therefore, I think expectations in terms of the grammage reductions that a whole host of companies had to undergo in the previous few quarters, they had pricing disruptions. They obviously also had a lot of ad spends coming through, which impacted their EBITDA margins. I think all those factors might largely be behind us as we head into the second half. Secondly, I think as demand comes back, which a lot of managements are pointing to, I mean, I'm not so negative or pessimistic as far as the growth outlook or earnings outlook for FMCG companies in particular is concerned within the consumer staple basket. And therefore, I think second half will work out well for a few companies. I think we remain optimistic on companies like Americo as an example, Tata Consumer as an example. HUL, Nestle is something that we've got on our watch list. Even Nestle, I think the management commentary was very, very positive. I think when it comes to confectioneries, 3 out of their 4 product segments doing well. Input cost inflation expected to remain stable or moderate going forward. So yeah, I think not too pessimistic. I think selectively optimistic on a few FMCG players.
I'll take your point completely there, Mayuresh. Well, moving on, remember the promoters of Infosys have decided to opt out of the IT major's 18,000 crore rupees buyback, a move seen as a strong vote of confidence in India's technology sector. Rima joins in with with the story behind this decision.
Thanks so much for that. So let's start with the Infosys news. The promoters of Infosys have said that they will not participate in the 18,000 crore buyback. The promoters own about 13% stake in Infosys. If they're not participating, it basically means the acceptance ratio for the remaining retail shareholders can go up. But the question is, are the promoters not participating because of the long-term prospects in the company or on account of the unfavorable tax treatments? Because according to the new rule, the buyback income is deemed as an income and will be taxed at the highest slab rate that you operate on. So basically, it's not very favorable for high-income people, which is basically the promoter entity. So that's one reason why Infy is doing up. But generally, there is optimism in the sector on account of clarification on the H-1B visa. Basically, if you remember that 100,000 visa fee, which is about 89 lakh, they've said that it's not applicable to students who are currently on F1. If they want to move to H1B, not applicable. It's also not applicable to L1 intra-company transfers. If you're changing your job, you already have an H1B visa, not applicable to you. And again, reiterating that it's only for, it's not applicable for those who are seeking a renewal or just an extension. And also remember, broadly, the IT earnings was not bad. The expectations were muted, but the earnings were stable. And this is a sector which is about 20% away from its 52-week high. So that also gives comfort. Back to you.
Okay, so lots of factors there explaining why IT stocks, in particular Infosys, did really well today. Rima, thank you so much for that. Somil, any interesting trades? And Infosys itself, I mean, what are the next levels to track after today's move?
I think Infosys is still in a range, in a very broad range. The lower end is 1400. The upper end would be around 1550, 1580 levels. So it's a very broad range. And I'm not expecting this range to break on the upside. 200 daily moving average is around 1580. So that will be a very, very strong hurdle. But on the other hand, TCS looks great to me. IT stocks are looking, a small reversal is expected. TCS, on the other hand, my targets would be around 3,380 levels, which is 200 daily moving average. A small consolidation has broken on the upside for TCS, and I'm picking this one from the large caps.
Okay, thank you so much, Somil, for that. So TCS is the one that you like from the IT pack. Well, from the broader end of the markets, auto ancillary Bharat Forge perked up in trade after securing a 2,770 crore rupees order from the Indian Navy. The company has clarified that it is yet to receive the order from the Army, but the new carbines the company says will replace the aging Sterling rifles as part of the Army's modernization drive. Sudarshan joins in with more details.
So first up, there was a clarification from Bharat Forge, and company has confirmed that it's the lowest bidder with the PLR systems for the order worth rupees 2,800 crore from Indian Army, and that's for the carbine, for which basically Indian Army is looking to modernize a Sterling rifle, and that would happen from September of 2026 once Bharat Forge and these PLR systems will start supplying carbine to Indian Army. Now, of this 2,800 crore, 60% goes to Bharat Forge and remaining goes to PLR systems, for which there is a JV between Adani Defense and the Israel's defense company, the Israel's weapon industries. Now, on the back of that, you had seen a big surge in Bharat Forge stock. At one point was up more than 5%, but it closed with a gain of 4.6%. Now, apart from this, we are expecting earnings for Bharat Forge as well. On the earnings front, we are expecting that auto ancillaries may have another subdued quarter even in Q2.
Okay, Sudarshan, thank you so much for that, putting that particular development in context. Well, Mayuresh, I want your view, number one, on Bharat Forge, couple of legs to that particular story. Number one, in terms of the auto ancillary, Class 8 trucks is something that has seen multiple downgrades, guidance downgrades coming from auto majors. But on the other hand, the India part of the business, especially defense, is doing quite well. Where do you stand on this name?
Neutral, Vivek, and I think for obvious reasons. I think, as you mentioned, I think Class 8, Class 7 trucks both are showing signs of some side of softness. I think even if you go through Mahindra CIE's presentation, their broad expectations, forget North America, I think in the European market, whether it's a less than 6-tonner or even the MHCV part of the segment, they're expected to grow in single digits, 2 or 3%. And that does not augur well for the industry as a whole. So I think whatever efforts that Bharat Forge will probably put in the domestic part of the business, whether it comes to the auto business, the defense part of the business, that might do exceptionally well, might get offsetted in terms of some element of softness being portrayed from the Class 7 stroke Class 8 business in the US. So I think sum of parts, I think the EPS numbers might just remain a little bit soft, even if we head into FY26, and therefore a neutral view on this.
Okay, all right, got that. Let's discuss the other big story of the day. US has imposed fresh sanctions on Russian oil companies in a bid to negotiate a peace deal in Ukraine. Somil is joining with details on what this may mean for India in terms of the oil refiners here. A lot of those stocks like HPCL, BPCL, IOC, all of them were under pressure today. Somil?
Well, yes, oil marketing companies are in focus because US has gone ahead and sanctioned 2 oil producers in Russia, that is Rosneft and Lukoil, and that is done to pressure Moscow to negotiate a peace deal in Ukraine. Now, do remember there were some sanctions that came by from European Union as well last year on these companies. Now, how does it impact oil marketing companies? Do remember that OMCs now may see renewed hassles when it comes to sourcing from Russia in terms of insurance, in terms of freight, in terms of cargo as well. 25% of the total crude imports are from Russia currently. We started it after Russia and Ukraine war that started, and that is the time where discounts on Russian oil were close to $15 to $16 per barrel, but now they've come down massively to $2 per barrel. So the idea that analysts are indicating is that it will not have much impact on the refining margins for these oil marketing companies. And also we had some commentary coming in from these oil marketing companies. For instance, MRPL indicated that they are not trying to slow down Russian oil purchases. On the other hand, a Reuters report suggested that Reliance Industries and HPCL Mittal Energy, they are urgently reviewing documentation and halting orders from Rosneft and Lukoil to comply with these sanctions that came by as well. We spoke to some experts as well. M.K. Surana, who is the ex-CMD of HPCL, he indicated that now we need to see if sanctions will keep Russian barrels out of the market completely. But he did not think so because China continues to buy Russian crude at current levels as well. And so crude prices will not be impacted in the near term because market is very well supplied. We spoke to ICRA as well today, and they indicated that while refining margins will have a small impact, it will not be much because discounts have narrowed down. Marketing margins will continue to be higher for these companies, and that is the reason we will not see a major impact on profits of all these oil marketing companies. So important to note what happens with supplies going forward, but for now the indication is it will not be a big impact.
Whether these sanctions will actually put out all the Russian barrels out of the market, I don't think that will happen because China still continues to buy, and it will be difficult to implement a sanction in the past also where 100% barrels goes out the market. Assuming that this hypothesis is correct, that some barrels will continue to be in the market, and assuming that with the current fast-track rollback of the Middle East supplies or OPEC plus supplies, currently the market is oversupplied. I think in a slightly longer period, I don't think that the bearish shadow on the crude market is going away with this, and therefore the crude oil supply should remain moderate. The price of the crude should remain moderate, and the market is well supplied.
The discount which we have got availed of in the last 3 years, ever since the sanctions were imposed subsequent to the Ukraine war starting, were fairly substantial. These had to be kept under the cutoff level of $60 a barrel, and Russia had invariably, in order to ensure that India continues to buy from it, kept the price below it, even when it had gone up to $65 to $66. Yes, of late, the discount had been reduced, but we continue to buy a fair amount of oil from Russia, and that some of it we've diversified, including we've been buying the US oil, US crude oil, and of course our traditional suppliers in the Gulf.
Well, some important voices, speaking about the latest sanctions on Russia from USA as far as the oil companies are concerned. Mayuresh, we want a quick word from you. Well, talking about the Indian OMCs, while marketing margins continue to remain quite robust, there appears to be a hit as far as the GRMs are concerned. So how do you look at these companies from this point on?
I think, Vivek, it might just be a tactical call. I think you have to play the cycles as they come. And therefore, I think taking a long-term fundamental view is something that we've always resisted at markets by India. I think it's all going to be a momentum and the cycle if they're going into that upcycle as well. But right now, I think it seems to be very, very volatile as far as the crude market is concerned, the pricing itself. And therefore, you're absolutely right. GRMs seem to be a little bit patchy. As Somil was mentioning, marketing margins might still hold on. But again, I think a sum of parts in terms of their other investments and other assets, including co-companies as well. I think all that has to be taken into account and therefore largely neutral on downstream companies at this stage.
Okay, all right, gentlemen, thank you very much. Good to get your perspective on all the stocks and sectors that we've discussed today. Thanks for joining in. We do have to take a very quick break, come back on the other side, and we'll get you some more perspective on the market, including the events to watch tomorrow. Welcome back. So the market's date with the all-time high had to wait today. However, most stock market experts and veterans seem to be of the opinion that it's a question of when and not if. Let's in fact get you some views and commentary from Mihir Vora of Trust Mutual Fund, as well as Sandeep Tandon of Quant Mutual Fund. Both of them say that the fact that the market is a little more grounded right now, there isn't too much of euphoria out there, that perhaps augurs well for higher levels ahead.
Even the macro situation is a bit of a mirror image. You know, last year we had more of inflation concerns in India. Now it's the other way around. There are potential inflation concerns brewing in the West, but India is in a good spot. We have no inflation. In fact, there is ample scope for cutting rates, etc. Last year we were not sure about government support, but this year, government, RBI, everybody's whatever it takes mode to stimulate the economy, budget-wise, GST cut-wise. And we have seen proof of the pudding that, these cuts worked, and at least the initial, ground level feedback from the Diwali season seems to be very good. So we are starting off on a good valuation base with low expectations, somber kind of expectation, but the incremental, delta on the macro seems to be better. See, there are two things to, look forward to. One is the immediate quarter, which is the December quarter, and as you've been reporting, everybody's been reporting that, consumer has gone ballistic and plus 20%, plus 25% on a YOY basis. Looks like the consumption spend for the busy season. So December quarter will definitely be good. Stocks have run up. All the auto stocks, the durable stocks, the discretionary stocks have done very well. So the question is whether this momentum of consumption will sustain into the next year. If the trade deal happens and the feel good continues, then we could see that momentum continue not only in consumption stocks, but even in the financials and the investments linked segment. So that's what we are looking forward to.
Are you betting on it?
This quarter consumption should do well because we have the anecdotal numbers. So we have increased exposure to consumption. But the question is, how much more do we need to now go into banking and the other segments also?
I think this rally has more legs. Maybe it has rallied significantly. Let's say, example, bank has rallied significantly. Small profit booking can happen here and there. But largely, we are constructive on the market. Three reasons for that. First of all, rupee also has peaked out from a longer term perspective. And that is what I'm trying, maybe from a short term phenomena, it has corrected and can recover a bit. But I think we are seeing a signs of some sort of USD INR peaking out. Means rupee has potential to appreciate. Or let me put this way, the pace of depreciation, that cycle is peaking out. The FIs, which has been significantly underweight, has reached also another important limit. And then we have seen the extreme high short positions completely missing. Their shorting has also spiked, the selling pressure which we have seen, and plus the underperformance which India has seen against both emerging market as well developed market. So I think the background is more constructive for Indian equities as compared to global equity.
Well, those were some important market voices coming in as far as how the recent rally could pan out. But before we wrap this edition of Markets Forward, Upasna joins in. She's standing by the wall with the key events to watch out for tomorrow's trading session.
Well, first up, let us look at the key stocks that will be in focus on the back of its quarter results. Stocks like ITC, Dr. Reddy's, SBI Life, Coforge, SBI Cards and Payments, Supreme Petrochem, and Aditya Birla Sun Life. All these counters will be in focus on the back of the Q2 FY26 numbers. Now, stocks like Cyient, Dalmia Bharat, HDB Financial Services, IRFC, LTI Mindtree will also be in focus as these stocks go ex-dividend tomorrow. On the IPO front, 450 crore worth IPO, that is the Midwest Limited, will be listing on exchanges tomorrow. So we'll be watching out for that as well. Now let us look at the global economic data. Japan and US will be reporting its CPI numbers. That is a key important data that we'll be looking out for. And lastly, US and China trade talks to be held in Malaysia tomorrow onwards. So we'll be keeping an eye out on that as well. So all in all, looks like quite an eventful day tomorrow.
Okay, all right, got it. Upasa, thank you very much for that neat summary. And with that, we're out of time. It's a wrap on this edition of Markets Forward. Thank you for watching. News and updates continue on the other side of this break.